Good evening. This is the Elliott wave update for the NASDAQ 100 for Tuesday, December 7th, 2021. The markets returned today and blasted higher once again. And what that does in the NASDAQ is it puts a low, and right now I'm marking that at 15,538. But with the break above 16,000, it negated what I was presenting last night, and that the NASDAQ still appeared to need an additional low below 15,538 to complete the structure that was in progress. And as I went back and I looked, it could be right here, and it could have been a failure because of the intensity of that rally yesterday. That the initially the market did drop, and it got down to 15,559, and that may have been the move that I was looking for, and it ended in a failure. So it failed to put in a new low, and the pressure on the buy side just did not allow it, and just took the market, and then it started to move higher. This is not uncommon in Elliott. So I could label this as the 5, the C, and the 4 right there. More importantly, though, I need to review what today's break higher does do for our near-term outlook and for the overall count here in the NASDAQ. As I was discussing yesterday, a break above 16,000, which it did and continued way above 16,000, that it would negate the downside and leave us with a three-wave structure down. That being the case, I had to go back and review my count up to the all-time highs at 16,767 and determine where I can move things around to still stay within the rules and the guidelines of Elliott and also be more representative of exactly what is happening and what we now can expect. So with the downside being negated right now, we are likely in that minor fifth wave once again. I know we've been here several times, and the reason is because the market continues to tell us that. And even though that I was put the 3, this minor 3 was here previously. And what it does, it just shows that this entire third wave extended much more than I was marking before. But when I went back and I looked, this fifth wave was just very problematic for me in that it just inched higher, inched higher, inched higher, went higher, went higher, went higher, and finally just spiked and died. And I didn't feel that it was the blow-off stage that should occur at the end of a move as long in terms of time as these sequences that are completing here. As we come up to these highs, we're completing not only a minor fifth wave, but an intermediate fifth wave, a primary fifth wave, a cycle fifth wave, and super cycle third wave. Now that super cycle third wave goes all the way back to 1932. So we don't have NASDAQ information because NASDAQ didn't exist. But when I compare it with the S&P and the Dow, they do go back that far. But here in the NASDAQ, I can go back to the early 80s. I have data that goes back there in the NDX. And so the count fits equally in both. But possibly what we're finishing here is that cycle level. And I don't need to drop up to the super cycle level, but I am going to, because I feel that that's really what's happening. And if I go back, I can show you via the NDX and also in the NASDAQ itself, the dot-com bust that happened in the year 2000 was devastating. So if that was super cycle wave 1, super cycle wave 2. What we're doing, finishing right now, is that super cycle third wave. Because at that drop, just to do a quick review, let's just take a peek. I can get my computer to comply. I'm going to pull up that maximum time frame chart. And we can see right here, I actually have it on the cycle level. But here we have that high that we reached in February of 2000. And that was at 4,884. I remember it well. And the market then collapsed. And the NASDAQ, the NQ, lost 87% of its value between the beginning of February the beginning of March in 2000. And I think it found its low in 2002. Let me just go right over here and I think it was October of 2002. So basically, in the year and 3 quarters, the NASDAQ lost 87% of its value. So this is representative on a cycle level. And so what we're really finishing up here are a primary 5. And within that primary 5, we have 5 waves of intermediate degree. But we're finishing a primary 5. We're finishing a cycle 5. So now I'm going to bring it back down very quickly so that we can just catch up with one another as to where we are in all of this. So here we are still in that primary 5th wave, which will consist of 5 waves of intermediate degree. So there's intermediate 3, here's intermediate 4. So we remain in that intermediate 5th wave. So within that intermediate 5th wave, we have 5 waves of minor degree. Remember, Elliott wave, building blocks. 1 degree is the building blocks for 1 degree higher, and so on and so forth, all the way up to the level that we're counting right now, and that is the cycle level. So here we started the intermediate 5th wave, and that's what got switched around. That the the minor 3 I had marked here, and that would have been minor 4, and this was the minor 5th, et cetera, et cetera. This decline was stubborn to get started, was fits and starts to get going to the downside. And if we're really reaching that top of the level of a cycle degree, the market should reverse and just not hesitate. It will be clear as a bell that that was a top and we're dropping. And I kept waiting for it. So I was very suspect, but I gave the benefit of the doubt to the market to show me and then us what is going on and what the intentions are. Well, that became very clear. And then as I was talking in yesterday's update, it became abundantly clear when I noticed that the Dow 30, the S&P 500, the NASDAQ 100, and the Russell 2000 all bottomed on Friday and pretty much all launched starting on Globex on Sunday. And I remarked about that on Sunday's update for Monday. Even though the NASDAQ bought it all the way up until just after the opening yesterday, the NASDAQ was intent on going down. We saw the sellers come in. We saw the sellers push it. We saw the sellers continuing to drive the market lower, or an attempt. And that was all right here. So this is Friday. And then this was Sunday. And immediately it was sold. We opened up. They sold it off. They bought it up. We sold it off. They bought it up. We sold it off. We sold it off. They brought it back to our opening and we sold it off. That's when we got down to 59. Then the buyers came in and they just took over, and that was that. And there was just no turning back. But there were periods of some stronger sells. There's one right there. So if I open this up, we'll see that the selling continued. So there was a lot of business being done with firms getting out or just people getting out. And then today, it just started and there was no turning back. There were tradable declines, but you just waited for your next buy entry, and that's the winners of pretty much all day. And then right here, after the bell, we saw some strong buying. And I believe those were partially market on close orders, and then all of the new money coming in after the bell, and it pushed the market with the NASDAQ again finishing up above 500 points. So moving up over 500 points. And at least I would say 60 to 70 of that came after the bell. So it's been a very, very hearty, decent, clean rally. And so that is why I moved everything around. And let me just put this back out so I can take a peek at showing the whole structure right now. So that is why I moved minor third, minor 3 of 5, minor 3 of intermediate wave 5, completed at 16,000, and that would be our high, 16,767. So what that then tells us is that this ABC turns into minor wave 4. So before I had labeled it 1, 2, and I had labeled this as the completion point for minute 3. And looking for a 4th and then a 5 to finish the minor 3rd. So minor 1, minor 2, and this would have been the completion point likely for minor 3, but it failed. So it all got switched, and so instead of being a minor, it turns into the minor 4. And this is the beginning stages of the minor 5th wave up. And again, I get a lot of emails and a lot of comments from people that, oh, you were wrong, you were wrong. And it's like, no, actually, no one is wrong here. We are interpreting what the market is doing. The market is very fluid. The market is very reactive. And so what we're measuring are the human emotions that are involved with the trading. Remember, Elliott Wave really has no clue about news, about fundamentals, does not take any of that into consideration when we are applying an Elliott count. Now, what Elliott can tell us is, gee, we're needing a correction here, which it did when we were at this point. The market needed to correct. So that part Elliott was clear on. But what also needed to be factored in as to what degree was correcting and then how far it would go. But I'm not going to get any clues on that until the market starts to unfold in that. So my original thought was that was the completion point for many degrees of advance. So the degrees of correction would have been of equal size. Well, now that we have a clear-cut path now been put forth by the market, the decision is made by the market based on what I feel is all technical indicators and a technical picture. I really don't feel that if we had to go out and find what is the fundamental reason that the market has suddenly latched onto strong bullish mood and pushed the market up, has pushed the Dow up over 1,000 points in 2 days, has pushed the NASDAQ up 500 points more, actually, 800 points in 2 days. These are tremendous rallies. Well, think about how much and how many people were getting short. Word did come around and circulates. If you know traders, you get a lot of phone calls and people talk. And I was being told today that really what they're finding out through their research and through their news stories is that really who was shorting here? Hedge funds. Hedge funds exits. Hedge funds, get me out, get me out. So who's buying here? Hedge funds. Get me back in, get me back in. And very typical. And again, it fits the Elliott because Elliott's based on emotional behavior and responses. And what it was here? Fear. What is it here? I'm missing out. Get me back in. Those are emotions, and that's what makes the waves work. Okay, where are we? Minor wave 4 complete. Minor wave 5 underway again. What can we expect? Well, as I started to lay out and now have put all the Fibonacci extensions in, again, the break above 16,000 negates additional downside for right now. Additional downside that would include a break below 15,538. Does that mean the market absolutely cannot? Of course not. That does not mean that at all. If something were to happen overnight that absolutely shook the world and shakes the world stage and really rattles markets, the NASDAQ's not going to go up anymore. It's going to follow whatever going on, and there's going to be massive exit, massive run for the exits once again. So, but right now, with everybody buying back in, with stocks like Apple going up almost $6 today to new all-time highs. Again, I talked about the gamma squeeze yesterday. It's happening again. It will continue. This is happening on the weekly options, and those weekly options get pushed, and you may have hedged your trade delta-wise, but as it gets up to your strike or goes through your strike, your delta might rises. And if it rises on the short side, what do you have to do? You must cover. You've got to cover those deltas. So that's why a gamma squeeze. Gamma is a measurement of how much delta will change for a dollar move in your underlying. So with Apple going up nearly $6 today, you betcha that gamma kicked in, because the many of these options that are in play expire on Friday. So it's could get worse if they continue to push the market higher. Continue to look for the gamma squeeze to affect Apple and AMAT and all of them, all of the option stocks, which have things that expire on Friday. We saw it hit Amazon today. Amazon up over 100 at one point. Google up 82, et cetera, et cetera. So the market is reacting. The market is seeing. But part of what we see in terms of the bullishness changes because we've got other factors that come into play that force the buying of the underlying. And so when you've got all that much going into play, it really does go towards Elliott and Fibonacci. Fibonacci also is able to give us thoughts and ideas and resistance levels when we start moving back into uncharted territory. We start moving back into an area where the market has never been before. So I can't pick a point and say you're going to find resistance there. I can't pick a point and say, well, there's support because see, the market came down to that level before. We're in an area where it's never been. Once we get past 16,767. Now, I do anticipate that that's what's going to happen. So let's talk about today. It was a great rally. It was very profitable, and both sides were in play. As a day trader, both sides were in play. I just knew that there was a bullish undertone, and that left me in a position where it's like, I will trade the downside, but I'm not going to get married to it, and everything was a scalp. To build a position and then to work it out, it was always to the upside. That's how today worked out. So what have we done? I believe we've done 1 and 2. And that this 1, 2, 3, 4, 5 may be the third. And I don't think it's a third of a minor degree, although it may be. So hard to tell because we are moving quite fast. So here's things going in its favor that this is a minor fifth wave screaming towards the top. As I mentioned before, one of the things that really troubled me about counting this as the completing 5 waves up for all those cycles. It just didn't, it troubled me because it didn't look right, it didn't feel right. But it did show 5 up, and the way my count was at that time, I put the 5 there. But this type of action, do we see it over here? A little bit, but not like we just saw it the last 2 days. Nowhere within there do we see that, and it's still an hourly chart. So this is much more conducive, I'll say, indicative, I'll add, that we are screaming towards a top. And it'll be a top of major proportions. So again, we got up to 382 resistance at 16,371, the high so far as I believe right here at 68.25. I would suspect that very shortly when Globex opens, they'll likely push it above because they're continuing to go after Apple. Apple's added another almost $2 to the close. So that'll continue to push Apple higher. Now, this, as I've been saying, this resistance and this resistance, I believe, are just points where the market will take a breath. So maybe this is going to finish 3, right? 1, 2, 3. We get a little 4th wave, and then we run up in a 5th wave. Now, again, I'm as to what degree is this wave 1 of 5, wave 2, 4 of 5, whatever that is, I'm not going there yet. The market still has much more to go. So I'm just going to continue to count 5 and count what, the 5 waves, and then look where we are, what still needs to be done, and then be able to put a label on it. Right now, 1, 2, 1, 2, 3, 4, I think I go 1, 2, 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of 3. Well, a little bit more. And if that's the case, then I'm going to look for a little 4th wave. Here's the territory it'll likely come down to. Maybe it'll come back and touch the 8, which the hourly 8, which happens to be sitting at 16,256. Very possible, because of the intensity and the amount we have rallied. 100-point drop in a wave 4 fits the bill. So again, in the terms of the market being up plus 500, giving 100 back is not that much. So then I would expect we begin to rally again. Now, what I found interesting is like when I was looking at my chart this morning and it was breaking above this 236, and I'm like, yeah, that I expected, and it's starting to now head up here. I started to look for, well, where else do I have resistance? And between here, there was nothing. And that's that zone right there. So I kept thinking to myself, well, the next resistance is 16,371. And I thought, oh, that's not going to get up there today. Took a break, came back. I'm like, oh my God, here we are. So in fact, here we are on the nose as we speak. So I'm going to look for a little bit of a pullback. We got to wait for this all to complete, and it's not looking like it's going to do it just yet. So we get a little pullback, and then we start to rally again. Again, we do have additional resistance up here at 16,427, 16,456. And both of those then take us above this 2. 2 is at 16,440. So that's just on a tail, but it still could be a resistance point. And that as well. So we have 27, 30, actually 37 to 41. And then that 50 level. Stay there. There you go, 56. And then outside of that, you can see just all as a black hole. And that's why it comes up all the way to 16,629. Now, people say, could that reach it tomorrow? Yeah, could. Look what it did today. It rallied 500 points today. It was above 16,000 in a heartbeat. Before it even got up, it was above 16,000. So the day started with me just thinking, just buy it, just buy it, just buy it. And that's pretty much what happened. Okay, so We have 16,629. We have 16,886. That is the 618 area. That is the most common for a fifth wave when compared to a third wave. So minor wave 5 would be 618 or 62% of the distance of minor wave 3 at 16,886.87. You could go then from 85 to 90, but that's the zone above, below, plus, plus. It also is a new high. So we are now looking for a new high out of this sequence. If it continues at this trajectory, it's a blow off, but it may not stop there. So again, being day traders, we trade what's in front of us. I'm not looking to position myself here because I think the market's going here. I'm just going to trade it. But above this level, remember, there is absolutely nothing to the left or to the right. We have nothing, only what we can project. So therefore, we have the fibs. 16,886, a break clears the path. And I bet it gets if the market should break above this point with any force, it's gonna just zip. It'll be zipping because there's not gonna be any offers. I don't feel that that'll be the case. I mean, yeah, there'll be offers out there, but it could be just that they're gonna sell you that and grab it higher because for whatever the reason is. But then we have 17,076, 17,253, and there's more above it. So we do have levels that keep just pushing. Depends on how much of a Christmas rally, of a whatever is behind the rally, that's what's happening. If it's a massive short covering rally, it could go. It could go. So year end promises to be exciting. For tomorrow, I'm continuing to look for upside. I believe we are getting very due for a small wave or pullback. Small, though, up on these levels with the amount in terms of point gained today, a small pullback could be 100 points or more. And still not mark a top, but just set us up for the next rally. I would continue to expect, and at this rate, we may have them by Friday, new all-time highs. And that's just above 16,768. Above that are new highs. So we're going to have some resistances. This is marked 16,773. And then it just goes from there. Again, we have 16,886. That's our level. That's a zone that I keep looking at. And that's why I keep it in this color. Because it's an important level. It's an important Fibonacci number. It's important in terms of how we measure the market, how we measure the intra moves. So in other words, a wave 5 as it relates to wave 3, and etc. So I'm going to leave it all there. Continue to trade smart. Please do not get married to any position. Please do not try to pick a top in this market and trade it. Let the market do that. Trade along with, make good money. You seriously will make good money. Use good risk management and trade with. Trade according to the moving averages, which on the hourly you can see the 50 still needs to get above the 200. And I'm fully expecting it now. Today was a huge move in that 50 because the 200 has been sitting up here waiting for everybody. The 20 zipped across, the 4 and the 8 we knew would be up, but the 20 came across today. And I would imagine if we continue to rally strongly tomorrow, that the 50 will be up above the 200. And then the hourly chart is in full alignment to go up. When all the moving averages that I use are pointing higher, it's full alignment. So, and I imagine that we're going to get that across the board. That's where I'm going to leave it. Our next update will be Wednesday, December the 8th.